and they want to see other. I got a couple of personal direct messages saying, I came with my sister and she was, skeptical, and now she just wants to learn more and more. And where do we go for that education? I was able to direct them to Looking Glass, the Looking Glass platform, for example. But let's go right back to what you said, Preston. We're taught in school that risk is volatility, right? In the financial courses. But here's the funny thing. A straight line that goes from the top left to the bottom right of a graph has no volatility. But if that's your price over time and it goes down to zero with no volatility, is that a low risk investment? No, absolutely not. Except we're taught that risk is volatility and value at risk measurement in all sorts of capital asset pricing models and everything. I'm going to quote Larry Lepard here. In an environment where interest rates are forced towards zero, cash flows attain infinite value.
Exactly.
Especially when you use the in perpetuity 1 over R minus G, where now everybody is focusing on the growth aspect. Did you guys see Amazon's results today? And I have a favorite quote. I used it today because I got on a podcast or on the Blue Collar Bitcoin guys. And I had a debate with Joe Colasari, if I'm butchering his last name, but I know you and him, Preston. And quite honestly, I went in there a little nervous, and it turned out to be a very productive debate. I saw his angle on certain things, and I think he's graciously said that he understands my position or whatever. And mostly we agreed on most of it, and then we agreed to disagree, which is fine. But there's a favorite quote I have from General Patton, which says, if everybody is thinking alike, then somebody isn't thinking. Mm-hmm. And that's what I love about the Bitcoin community, right? Like, there's certain things that, I just won't see eye to eye with the group. It doesn't mean I'm right. It's just that, my opinion might be different, and I choose to manage risk a little differently than other people choose to manage risk. But I think by and large, this is a community that wants to learn. Continuous learning is something that I certainly strive for. I think, Preston, you would agree, and Jeff, obviously, because the world will change. Using your line, Jeff, there will be 100 years of change in the next decade, right? In the next 10 years, we will see 100 years worth of change, and that's pretty overwhelming for a guy that's 60 years old. Because, I've seen a lot of change, and I can't imagine that we're going to see that much change all combined into the next decade. But I do believe it, seeing some of these young kids that are doing stuff like Obi. We had a guide on the bus that took us around Bulgaria, and she was just a great young lady who was a Bitcoiner without realizing it. Even her comments about governments printing money when she was taking us around. Well, this bridge was built, because the governments had money, or the EU had money that they gave us. The reality is, by the end of the trip, she was, she's a full-bred board Bitcoiner right now, who I saw a sparkle in her eye. It's fun when you if you're intellectually curious, it's always fun when you get a new thing to discover. So I have big hopes for her as being a person who's going to onboard part of Bulgaria. There's 6 million people in Bulgaria, the same size as El Salvador, but their economy is substantially larger just because it's a former well, it is Eastern European, but prior to that, it was, it's got a very deep history. So it happens. You make little victories, and then, in a year's time, we'll come back and see that she's onboarded. I do not, but I want to hand it right back to you. I don't, but nobody does. Like in this case, we're on the head of a pin because November 2nd, the next Fed meeting is going to be the all tell whether they, you always have to define what a pivot is so that we don't confuse everybody. But if you define, if I make a definition of a pivot, I think that, the market certainly is anticipating some form. But back to you, because my subject is probably going to be a little more pointed rather than a shotgun approach. I have a pretty pretty interesting subject I'd like to hit. So Preston, sorry, John, they did start with negative yields. That in itself was one of the most ridiculous things that I've ever experienced. When a bond is paying a negative yield, it's no longer an asset. It becomes a liability, right? It's just flipped the entire asset management business on its head when part of your portfolio, as high as a 40% allocation in your portfolio, there were parts of the yield curves in Europe that were generating negative yields, negative returns. The greater fool theory was, well, they'll go more negative, so I'll be sure to pick up this nickel in front of this steamroller and sell it before I get rolled over by the steamroller. Well, guess what? The 60-40 portfolio is baked. Okay, it's the first time in history, and that's the point I wanted to hit. If you're an asset manager in this world right now, you've just had the worst 9 months run in the history of the NASDAQ and long bonds. And that's the reason is the NASDAQ's only been around for, just over 50 years. You'd have to go back to the Great Depression to see a point where long bonds and equities were both down double digits in a 9-month period. That doesn't sit well with pension fund managers. They all of a sudden become unfunded or underfunded pensions. Right, Jeff? It's all a game of confidence. As soon as you lose that confidence, like Credit Suisse is so baked, it's not funny, right? Everybody's holding out hope that they'll do something. Well, you know what? I've seen it so many times. They've lost the confidence of the market. Yeah, the Saudi fund is going to come in, or there's a Middle East investor. But at the end of the day, it just got. Can you imagine that there was a time when TD Bank would have been TD Bank, one of Canada's largest banks, is now 10 times more valuable than Credit Suisse on a market cap basis. When I was working at TD Bank 20 years ago, we would have given our left testicle, all right, to have been just as valuable as Credit Suisse, right? And this is destruction of a 100-year-old institution through leverage and all the things that Jeff says, the credit contagion, the loss of confidence, the bad management, the Archegos, Bill Huang, prime brokerage debacle, wiping billions of dollars. Before the government's own Congressional Budget Office projections. I mean, if that was a company, just go to the website and look at the Congressional Budget Office's projections for the U.S. debt and deficit over the next 10 years. And this is, by the way, it's conservative. It doesn't matter. It's still so ugly that if it was a company, you wouldn't touch it with a barge pole. Like, I mean, and yet these are their own projections, and they assume that the world is still going to fund it. Now, the world still will fund the U.S. The problem is it squeezes out capital from the rest of the world, and it attracts capital and it removes capital from, even China and places like Japan, where you can use that CapEx. Nope. The insurance companies in Japan are selling all their U.S. treasuries because they're trying to defend the yen, the James Lavish argument, the what yield curve control, and then the paradox there. So it is ugly. The debt spiral is upon us in huge form. It's funny that it's just getting the attention that you and I were screaming about over a year ago.